Your accountant says you got taxes to pay on money you can't find. Bonding company says profit isn't there and is going to have to cut your bond line down. Same year, two stories. Which one is right? Today we're going to clear that fog for you. This is the Contractor Success Forum. I'm Wade Carpenter with Carpenter Company CPAs alongside Stephen Brown with McDaniel Whitley Bonding and Insurance. Stephen, I know we're talking today about WIP reports, and I know that we have a lot of things that happen with WIP reports and how they can be modified, and most people don't want to talk about them, but this is where you live, right?
It is. It's my playground, whips. And I can tell you that they'll make or break a contractor as far as their bonding capacity. Because here's the thing, the whip tells an underwriter so much. You remember, Wade, I was telling you that bond underwriters underwrite on the future? Well, the whip is showing how the job's in progress, your work in progress. In the old days, it was called a work on hand report. But a WIP is your work in progress. What do you have going on? How much have you billed for it? Are you underbilled or overbilled on this particular project? What's your estimated gross profit? Are you making money or losing money on a job? Are they wildly fluctuating? At the year end, you look at a WIP and you see a job has lost money. The first question any underwriter is going to ask is, why did this one lose money? You can't say, I don't know, because there's a reason. The WIP is a wonderful thing. And also, it's wonderful in a way that it can help an underwriter get comfortable with backlog gross profit. What is your backlog gross profit? What's your track record of bringing these projects in on time and making the profits you generally are going to make? So that's worth its weight in gold, Wade. I can't wait to see where we're going today.
A lot of times, what I see too is the companies that do a monthly WIP are so much better run and make so much more profit when they know how things are going, and goes a long way with the bonding company. But the WIP report has a lot of uses, not just for the bonding company. I know you probably get these in the middle of the year bond requests, and you got to fill out a WIP report. And we're going to go through some of the things that go into that today, some of the problems with coming up with the schedule, and just give you a little bit of how to, but also hopefully some insights that will make you think about where you're going and your profitability with these jobs.
Okay.
Stephen, I want you to chime in on all this stuff as we go. Again, why should they care about this? Obviously, your bonding capacity. Talk about that for a little bit. How does your WIP report and having a good WIP report that you can rely on? I know you were talking about one of them recently that didn't have all the columns filled in. Talk to me.
Sure. A WIP report, first of all, it has to tie into your balance sheet and income statement. If you give me a balance sheet and income statement without a WIP, you're giving me about 10% of what I need to do my job. But if a WIP ties in with your balance sheet and income statement properly, it all makes sense. And it's a fundamental to accounting. It is absolutely fundamental. And the more jobs you have, the more important that you do this WIP. If you just have one job, and you may not think a WIP's important, but you got to learn how to do them and add them. So WIP is a feature on QuickBooks, but you can't just push a button and create an accurate report, can you, Wade?
Well, it's a part of the enterprise version, but it's definitely not automated in QuickBooks, any of them like that. Some of the more sophisticated software can come up with stuff like that. But it's only as good as the input that goes into it. These things can affect your banking relationships. I always say, you probably say the same thing, this is key to knowing where you are. So you can run better decisions if things are going south on a job. You know it before things really hit that, and maybe you can do something about it, or at least make some adjustments to it. I know what you were talking about, these accurate financials, and I'm just thinking from your standpoint, I see it too. Okay, you turn in a WIP report, a year-end financial statement that has last year's over and underbillings. Well, it's exactly the same as last year. They haven't adjusted any of it. How accurate is all that? And I think we're going to get into that. As we were saying in the introduction, I think the cash basis can fluctuate up or down really quickly, but the WIP report is really what sort of evens the score, I think. Agree?
Agreed.
If you were trying to pull a WIP report together, what are the different things that you would need?
Yeah, these are the criteria. And if you're missing any of these, and yet you have them, then everything's not going to compute properly, because Each item in there depends on how the other item is calculated. For example, you got your original contract amount or your revised contract amount, and then you've got your cost to date. And let's just assume that all those costs are posted properly at the time you run the WIP report. Then you got a total estimated cost to complete, and you subtract that from the revised contract amount, and that's your estimated profit on the job. What if you haven't billed it properly? What if you've done the work and you haven't billed it yet? Then you have an underbilling. And what if you've overbilled the job and you haven't done the work? Then you have an underbilling. And that affects your balance sheet.
Absolutely. The inputs are very important to this part. The change orders that was talking about, like, okay, maybe we put a change order in there, but did we adjust our cost to complete? Do we actually have accurate cost to complete? One thing I see all the time, like the billings part of it, that's part of what we're going to talk about too, is does it include the retainage? A lot of people just book in their net billings after retainage. So that's going to perpetually show you're underbilled. You can talk better about this, but what does that do to your bonding capacity if they start seeing you're perpetually underbilled?
Well, if you can't explain it by showing them the retainage you have, it's just going to be tossed out and what they evaluate to give you bond credit. You don't want that.
This is the components that actually go into these things. That's where it matters. And I want to talk some more about this because if we're using the wrong cost to complete or whatever, all these things can affect it. Your project managers aren't really tracking these things. If the costs aren't up to date, and if you don't have good job cost records or good tracking, you probably are missing not only just having the costs in there, but a lot of people still never put that relationship together because it doesn't make sense. You put more costs on a job, it makes it more complete. It actually bumps up your revenue, which is counterintuitive. But as we go through the conversation here, I think it'll make more sense.
Okay, let's do it.
All right. Well, let's see. When we're talking about percentage of completion, I've got an example here. Let's say a whole job's going to cost us $800,000 to do is what we estimate, and we're $400,000 into it. Easy math, we're at 50% complete.
Okay.
A lot of people think I billed 50% of it, but have you actually earned it? So that's where we're going with this. Obviously, from a cash flow standpoint, you want to front load that as much as you can. Sometimes you can't, but are you way overbilled or way underbilled? I think you probably can talk better than I can about the bonding relationship when they start getting nervous. If you go too far extreme on one way or another.
Yeah, usually you'll see a mix of both underbillings and overbillings overall group of projects, and it won't be a large percent of the overall revenue, but of course that happens because different things happen. You want to bill when you can, as much as you can, even if you hadn't developed the cost, but if you don't have the right system in place, you could be robbing Peter to pay Paul, getting that money in and using it on another project. And then you're getting into a lot of trouble. So that's why bonding companies look at this so carefully.
Exactly. I mean, somebody's showing like 80% complete and they've only done 35% of the job.
That doesn't mean the bonding company is going to say, oh, well, you don't have any work going on, so we'll give you more bond credit. No, they're going to go ahead and assume that you've got 65% left to do on that particular contract.
Well, also, okay, you got to skip out and leave town and leave everybody hanging. So
take that cash and hit the road.
Right. Well, in the calculation, this is where having the accurate cost to date and all that total estimated costs. But just walking through this simple example, let's build on this. So let's say we had a $1 million job and we're 50% complete. That would mean we've earned $500,000, right? Again, we're just doing simple math today for an example here. What does that have to do with how much we've actually billed? Well, if we start looking at what our gross margin is, we expect that we got $1 million job as far as revenue, and then it's going to cost us $800,000. That leaves us $200,000, 20%. Not rocket science.
Right.
In this case, if we're at 20% gross margin and we had already billed $550,000, how's that math work? We billed more than we've earned. So talk to me a little bit about overbilling versus underbilling.
When you're overbilled, it shows up as a liability, a current liability, because a current asset and a current liability are what you have in cash and accounts receivable So if you have overbilled a job, then you've got the cash in, but you haven't associated the cost with it. There has to be a counter posting as a liability, right? You can't just overbill and use that as extra working capital. It has to be offset. Overbillings are a liability and underbillings are an asset, and they show up as a current asset. So if you have a lot of either, the bonding company is going to ask questions. Why? What's going on?
I know it's a case by case basis, but in general, would you say that there's any kind of rule of thumb that you get X amount overbilled or underbilled that they start getting nervous?
Well, I think they look at your overall program. Sometimes overbillings are as much as 50% of your program, and that's scary. You see a lot of that where you see one or two jobs that are way overbilled, and there's other jobs that are losing money. That's going to be a prime example for that cash disappearing. And then underbilling, are you underbilled because you've got a lot of costs because you forgot to put a change order in? We see that all the time.
Yeah, there's a lot of things that can cause these things and cause them to be wrong. I remember, well, this was a continual problem because I had a school contractor that had a May year end and we did audits for them. Obviously, the biggest part of their work was done in the summer when the kids were out of school. And they had one county they were doing a whole bunch of stuff for, and they took off the whole summer. So they actually allowed them to bill ahead because they weren't going to get paid over the summer. So we were showing like $3 million over billing, which everybody was really nervous about that. It was great from the cash flow standpoint, but the reality is like they understood it, the school system understood it, and everybody's happy if you can explain it. I'm sure you see situations like that all the time.
Yeah. It's
Maybe
not
not.
necessarily good or bad,
Right.
but if it's habitual, then you've got to ask why. Can it be explained as a function of the work you're doing, or can it not be explained? And that's the key.
Well, we could play with numbers here, but our simple example, if you're listening to this on the podcast, you may want to check out the YouTube channel for this because we're doing stuff on the screen. If we raise our cost to date and we actually got that extra, we're starting off with our gross profit and we had another $10,000, what does that do to our revenue? Our estimated gross profit doesn't change, but our overbillings change.
And Wade, I love for our listeners that aren't looking at this online, what we're looking at is a calculator called Interactive WIP Calculator that you put together.
Yeah. So let's just say that's 700,000, whether it's $10,000 or $20,000 over under bill, that can swing this number. And it's surprising to people that, okay, if we add something to that cost number, it actually bumps up, assuming we got a profitable job.
Right.
Again, we got a couple of different scenarios like a healthy job versus whether we're getting underbilled. I don't think we have time to walk through all these, but I just sort of stumbled into the lost jobs. I know typically a lot of people don't report this properly or don't report it to you that they're going to lose money at all if they're turning in their internal WIPs. But what's your perspective on when a contractor's got a loss on a job?
Well, first of all, that they didn't estimate it properly. That's the first thing. Where there's some unit costs involved in the original estimate that just weren't correct. That's the first thing that you need to check. And then the second thing is what other criteria is making you lose money on this job? A lot of jobs that I see, the contractors bidding it tight, needing to get the job for any number of reasons. They're bidding it without their normal profit margin involved there, hoping to get more work, hoping to keep their employees busy. And they end up losing money on something that they thought they were going to be close to breaking even on.
And construction is pretty volatile. Things happen in construction. Things will go wrong sometimes. I guess you want to take a look at why, but if a contractor comes to you in the middle of the year and just has something to bid and they turn in their own WIP schedule on your form and didn't talk to their accountant about it, I was curious how they were reporting it to you because GAAP accounting rules say you're supposed to recognize that loss as soon as you see, you're going to have it. But in the real world, when it's getting to you, how are you seeing that?
Well, they're reporting the loss. That's not the issue. It's the jobs that are making money that are making a big profit that they want to offset that loss. So you might have some losses on some jobs and some big profits on other jobs, and you tweak that to help your taxes.
Well, it depends again on the method of accounting and that kind of stuff. And I probably don't want to go too deep on that today, but the point is the calculation does get affected when you got a loss. And if you're turning these into your bonding company, they want to know about it. Number one, I think they'd
Yeah.
rather not be surprised.
That's right.
Is that fair to say?
Absolutely.
I know we're playing with numbers, but this is another thing that I see all the time. We talk about change orders that are not in there, the costs are not in there, but there's also, if you ever done an AIA billing, you've seen the stored materials. And generally accepted accounting principles say you can't recognize profit on stored materials. Maybe you bought a bunch of materials up front for the job, but until you got it installed on the job, you're not supposed to be picking it up as income. You can pick it up to the extent of the cost, but not the profit part of it.
Right.
So a lot of people don't take that into account. And if it's a few $1,000s and depending on the size of your jobs, maybe that doesn't make that big a difference. But I've seen some pipeline contractors spend hundreds and hundreds of $1,000s of pipe up front. You know where I'm going with this?
Yes.
I'm not sure that this is going to be a master class in it in the 20, 30 minutes here today, but I just want our listeners thinking about what's going into these things and understanding what should be in here. So let's keep going. When we start getting closer to 100% complete, we have some other considerations. That probably is a topic for another day of what is really considered complete from the accounting standpoint, for the bonding company standpoint, from the IRS standpoint. It all can be different. Any comments on that?
Now that makes perfect sense. And a lot of times when you're pre-ordering materials on a job, an owner agrees, I'll let you go ahead and pre-order those materials because of the current economic climate out there and getting them on time. We understand the importance of that, but we're going to only reimburse you for your invoice. And also, we're going to need insurance proof that we're going to need to store those materials on our site, and we're going to need you to insure them as well. So there's some cost involved there.
Absolutely. We see a lot more of that since COVID when we had all those price spikes and people got very worried, some losing jobs there. What are some of the warning signs if we're looking at a WIP schedule? Let's say we got a renovation project from schools. From the bonding company standpoint, when are we starting to worry that something might be going wrong? In this case, they budgeted 720 and now they're seeing it's pushing up to 800.
Yeah, you're showing your estimated cost to complete as going up, yet your contract amount and change order isn't going up. And they're going to ask if you just forgot to put a change order in there, or is this some cost you hadn't anticipated? That's just the most fundamental warning sign you can have when you're looking at a WIP.
And also being accurate at these things too. I love your take on this. So you have one job that we report a year, you're going to make 15% gross profit, and then they come in the next year after reporting it on the review and, oh, it tanked by 15%, you know.
Yeah. Well, what if you're sitting down with your bond agent or your underwriter and you're looking over the WIP and they're asking questions? And on this particular job for Metro Builders, you're showing the additional cost of the asbestos remediation. So that's getting ready to be booked as additional cost, which is going to affect your bottom line. And then you go back and you say, well, we've got a change order we're expecting any minute now. You're like, really? So you incurred the cost without a change order? Well, we've had to take them to court. That's more cost involved. But bonding companies say, okay, well, we're going to take this out, and when you refund your money, it'll affect it in the future. So that's the way they look at it.
Absolutely agree. And as we said, things will go wrong in construction. You miss that bid 1 year and then the next year you have fades between multiple years. If it starts becoming a pattern, how do they look at it?
A lot of times you're shooting to break even, okay? You're living vicariously out of your company and you're saying, hey, if I break even, I'm okay. If you lose money 3 years in a row for a bonding company, that's usually the kiss of death. You can still get credit scoring bonds, but that's about it.
And that gets a little more expensive too.
That's right.
Yeah.
Bond premium goes up.
What I was hoping people would get out of it was what is making the bonding company nervous? I shouldn't say this. I don't want to offend any bankers, but most of the bankers are not sophisticated enough. They're not diving into these jobs the way
Yeah.
a bond underwriter would.
And there's so many other things that different bond underwriters read into WIPs that they ask questions about. Your ability to answer those really let them have a comfort level of how well you control your cost, how well you control your jobs. So you're pushing the edge of the envelope on a bond program that already has an underwriter questioning your data, then they're just not going to be easy about saying yes to what you want them to do.
Yeah.
I know that sounds like an understatement of the century, doesn't it, Wade? But it's the whole power of the whip. It's got to be there. You need it to operate your business. If you don't have it to operate your business, why? Well, that's what this podcast is about. And also, if you do have it to operate your business, is the data correct? And how are you managing the fluctuations in estimated profit? This is usually not a big deal. Good contractors, this is a pretty routine discussion that you get through.
Both of us see contractors, sometimes they'll take off and they went from no structure to all of a sudden they're doing millions and millions of dollars and they never put the structure underneath it. Getting their cost codes and that kind of the whole system is one thing, but they can get to this level. Obviously, when the numbers get bigger, it gets a lot more risk. This is where we really need to get a real handle on, from my perspective, and I think you agree with me, this is really how we're doing. The cash basis can fool us because money can go in, come out just as fast. We can have a lot of money stuck in a billing, but if we're way overbilled, that doesn't mean we've actually earned that profit.
You are exactly right. That couldn't have been stated any better, Wade. You are overbilled on a job and you're showing a lot of working capital and you think you're going to get bond credit for that? No.
I had a couple more scenarios. What I would like to do is talk about some of the things that we've already said, miscoded costs. I see it all the time. That a project manager will bury the costs or stick it on somebody else's job, and it can swing the gross profits and the over and under billings quite a bit if you put it on the wrong job.
Absolutely.
We've already said the unrecorded costs. You got a sub invoice that didn't get in there. You're not timely enough. It's sitting on a project manager's desk, or it was riding around the field supervisor truck for 2 weeks before he turned it into accounting. As we said, that can affect it. Stale estimates. If you originally bid a job, but we got some change orders on it and the costs are going up or whatever. I mean,
What about when materials were hard to get and you thought you anticipated properly what the costs were going to be in the bid and put some padding in there, and the worst case scenario is worse than you anticipated? You got to go in and plug those estimates back in of the true cost, or your whole bid is stale.
yeah.
You mentioned unrecorded cost, Wade. The first thing that popped into my head is office manager name is Patty, and everybody in the construction company said, when Miss Patty came blowing into a job trailer, you were going to get a cussing. And that was a long time ago. So unrecorded costs, miscoded costs, you think to yourself, if I'm going to get on top of miscoded costs, someone could be stealing from me. They could be padding another job and padding their own profit. Miscoded costs is huge.
Yeah. One of the biggest things is using that gross amount of billings, not your net amount after backing out retainage. And it can make it look worse than it actually is. If you're just given a accrual basis statement, you got a bid that's due tomorrow, and he doesn't see that, it might look like you're really losing money.
Because what is mishandling a change order? Well, first of all, to me, that means not putting it in writing and invoicing them for it. Or you have it in writing, they approve it, and you haven't invoiced them yet. A lot of contractors assume that I'm not going to issue a change order in billing until I finish the work for them. And that's not good business.
Yeah. We could probably spend a lot of time talking about the things that go into a good WIP schedule. We're sort of scratching the surface today. I'd like to talk about our monthly checklist.
Yeah,
maybe
go
talk
ahead,
about-
please. Best practices.
Yeah, I did put together a booklet for anybody that's interested. If you want to download it, you can go to carpentercpas.com and get it. But just making sure those job cost entries are in there. Accounts payable invoices. Everybody still thinks that, hey, I don't want to get those costs in there. It's going to make it look worse. But if you're actually doing your WIP properly, it's going to help you.
It's not only going to help you, but it's going to help your vendors get paid on time, which makes them more than a fair weather friend when tough things come up.
Project managers, I know they have a tough job, but sometimes they don't realize, or maybe they do, but getting those bills out the door, make sure they've reviewed them and updated those cost estimates, making sure those are in properly and the bills get in properly. But are we updating change orders? Are we identifying the stored materials? Maybe it's on the AIA billing, but we didn't tell accounting about that. Making sure the billing is everything in there, for the retainage is in there. Your total estimated cost is actual what you expect it to be. Maybe it was your original bid and you haven't updated since your original bid. I see that all the time. The projected losses. And that's another thing. When I was in auditing days, part of the steps would be we'd go out and visit a job, and does the percent complete that's on paper compared to if you go out there and you see nothing's done physically, I mean, that can be a red flag.
Absolutely.
I mean, I also like this completed jobs too. We've seen some like counting maintenance contract or something like that, and it was maybe more than they were ever going to get just as a contingency, but the job is done and all that stuff, and they leave it on the schedule. And it's like, okay, well, you're not actually going to get that money the rest of that contract. So closing out.
And Wade, the completed job schedule and looking at your year-end financial statement and your WIP, work in progress report, they have the identical information in them. Your completed job schedule to a bond underwriter is as important as the WIP.
Properly figuring your over and under billings. I know we've talked about this before. McDaniel Whitley has their own form. I'm sure you'd be glad to share that with our listeners as well if you had something like that.
Yeah, absolutely. It's a self-calculating Excel spreadsheet that will help you do a WIP. But here's the thing. If your WIP's really accurate, it's tied into your accounting system. So it's really hard to do them individually if your system isn't pulling out the exact data you need for them. And if it is, your system should be able producing these reports for you, and they should be pretty accurate. And so you look at those red flags and you ask yourself, well, I'm looking at this WIP. How accurate is it? Well, you're reading it over as the owner of a construction company. Well, we know we just paid out so-and-so, and I know that hadn't been billed yet. You're thinking in your mind, so here's our snapshot. Here's the changes that are going to occur to this snapshot. And here we go. So you don't just send it, you help explain what's going on any given day, because a WIP is a moving, evolving product that helps you understand how you're doing. And it changes. People usually don't run them every quarter. How often do you think they should be run?
Oh, the best ones run it every month.
Every month?
Every month.
To go in?
We're adjusting it every month.
Yeah.
But it is a little more rare, but the ones that do really know how they're doing and do really well. I see it all the time.
Yeah. Some of my best companies can turn over an accurate WIP and balance sheet that's a month and a half old. You know, a month old, boy, that's a great goal if you can do that.
Even a quarter, 6 months, a lot can happen to your bids in 90 days. The jobs that things are going on. So that's my take on it. And we don't see it all the time. When I can convince a contractor to really run it that way, they eventually get it. A lot of times people struggle to pull these things together.
It's certainly powerful. And you get a WIP on just one particular job when you sit down as an owner with the project manager, and you either say that this job's on track or it's not on track. And if it's not on track, what's the problem? What are we going to do about this? So when you say for bonding and banking, that's not as important to me as the third one you show here for internal decisions.
I believe the same thing. You can make better decisions when you have great information. And yes, obviously, if you can show your bonding agent that their underwriters, like, hey, we can produce this really quickly, I think that still goes a long way.
And for banking purposes too, your financial statement may not mean much to a bank, but you go to a bank and you say, I've got this contract and here's the documents. They're letting me pre-bill for these materials, and I want to borrow the money to do that. I'm build that into my cost when I'm bidding this job. So I'm going to use the bank's money to finance this until the owner reimburses me. That's a good business practice.
Yeah, I say that all the time too. Sometimes the bankers are not as sophisticated on the job stuff, but if you're going in and trying to get a loan and you give them, I say, a cash flow projection, and the numbers just look, everything's rounded and all this stuff, they're not going to put any stock in that. Same thing with a WIP schedule. They may not completely understand them, but if you can sit there and say, here's what I've got coming up, and this is what profit we're going to see, and I need some help to get through this cash flow crunch as we're growing. And you can prove it to them and, give them something to go by. I think that's one of the underutilized ways a WIP can help.
That's right.
So I know we've gone really long on this one, but I'm sure we could spend a lot more time talking about some of these scenarios. I hope this has been helpful. Any final wrap up takeaways for us?
No, I think we've covered everything. Just to summarize the podcast, WIP is an important tool. It's one of the most important accounting tools you have in your bag. The elements that create them are simple. The things going on behind the scenes can be complicated, but the faster you master it, the more money you're going to make.
Wow, I love that. End on that. For those listening, I did actually put together a how-to book on this. So if you're interested, go to carpentercpas.com and we can offer that. Or Stephen, I don't know if you wanted to offer your WIP schedule with.
Sure. You can reach out to me at stephen@mcwins.com and I'll be happy to email that to you.
Great. Okay, well, I hope this has been informative for everybody. We do this every single week and appreciate it if you like, share, subscribe. It always helps the channel out. And we will see you on the next show.